Alright everyone, Cowboy Trades here, welcome back to the channel. So I just wanted to make a quick update on liquidity conditions and also talk about why we might be expecting a tiny bit of a pump before obviously that next macro dump. So let's dive right into this. First of all, what I want to emphasize is this small pump that I'm talking about is really in play on the lower time frames. If you've been watching, all of my videos, all of my macro analysis, we've been talking about, how liquidity conditions are topping out. This is going to be the first chart that we're going to start off on. So as you can see, we've got a top over here in the S&P 500. We're going to move on to Bitcoin in just one second. But you've got top, you've got a lower high, lower high, lower high, and every single time you can see we ran into this trend line exactly. Now, you may think I've highlighted this vertical blue line just above where we top, but it's not actually in correlation to this. What it's in correlation to is the liquidity conditions for the E-mini futures in the S&P 500. We talk about the book depth, we talk about the bids and the asks, the mid price quite often on this channel, so you should be familiar with this if you do watch me. But nonetheless, as you can see, liquidity conditions topped out on the 30th of December. What happened over here? So this was pretty much the top, as you can see, marked by the 30th of December. We almost exactly topped out on that date for the S&P 500. When was the next time we had a macro top? The 31st of March 2022. Come over to here, 31st of March 2022, and you can see once again running in this trend line. And if we look here, you can see we quite recently had a top, August the 18th. Come over here, this correlates to this macro top over here, and recently, it was only a couple of days ago, a week ago to be precise, December the 1st, that liquidity conditions topped out, and they topped out exactly at the top. So if you are a crypto trader, I definitely recommend understand how liquidity conditions work for the greater markets. These will definitely help your analysis, because at the end of the day, Bitcoin is really just going to follow the same swings as the S&P 500, so knowing the precursors of how the stock market is going to move is definitely going to help you. So am I saying that this pump is going to be monumental and break this uptrend? Absolutely not. If you actually look, you can see during this top, this top, this top, every single top, we have a brutal breakdown, and it's like we form a bear flag and we push back up a tiny bit. If I draw a fib, you can see from here to here, we retraced into my Fibonacci golden pocket on this. Let's look at the next Fibonacci. So you can see from here, we just retraced almost to the 618 in the golden pocket. From here, brutal breakdown, didn't quite make it, made it up to the 0.5 Fibonacci. So all I'm highlighting is in the lower time frames. It looks like, and I'll pull up the individual wave counts in just one second, it looks like we've basically completed that first macro breakdown to the downside. We are currently sitting at a gamma level at 3,900, and I do believe potentially we could have the chance to push up to round about 4,000 or so. Does that mean I'm going to be longing it? No, I'm just giving you a little warning that we could push up a tiny bit more before we do start to snap back to the downside, because we do obviously have to remember in the macro time frame, look at the mid price. It looks like, I'm sure you can draw a trend line in your head, because unfortunately on this chart I can't draw trend lines, but you can see boom, boom, boom. We are in a descending formation right now, and it looks like we've pretty much topped out. But it's the same with the liquidity conditions. You have a breakdown, tiny bounce back up, retrace into like a golden pocket type region, breakdown, tiny bounce back up, breakdown, relatively big bounce back up, but brutal breakdown to the downside. So we could just be getting ready for a tiny push up to around about 4,000, which is going to be a huge area of liquidity before pushing back down to the downside. Now, another reason why I think this is definitely a possibility is if we come over to the 4-hour time frame and check out our Elliott wave count. Now, if you remember, we talked about this about 10 days ago, not 10 days ago, sorry, we talked about this chart 2 days ago, and we also talked about this Elliott wave count being almost complete 8 days ago. You can see it's the thumbnail of this this video over here. And this aged pretty well, because as you can see, we were making this analysis round about here, and we've started to rocket to the downside. So our original wave count was obviously from the top over here, breaking down into new lows. You had a bearish 1, 2, 3, 4, 5 wave count. What happens after a bearish 5 wave? A macro A, B, C correction. If we look at the final C wave from B to C, you can see you completed that 1, 2, 3, 4, 5, and that was the end of the wave count. Now, I do believe there is a chance, once again, looking at liquidity conditions, looking at how the stock market's previously moved, I do think there's a chance that we probably have completed the first one wave to the downside. You can see we're pushing up relatively strongly right now, and I mean on the 4-hour time frame. You come over to the stochastic, pull up a few of these indicators, and you can see, the squeeze momentum indicator has a little bit of room to move to the upside. The MFI has a little bit of room to move to the upside, and the stock RSI is turning up quite strongly, and it doesn't quite indicate indicate to me that we've topped out at this very moment in time. So looking at oscillators, momentum indicators, and also, once again, how the stock market generally moves after these macro breakdowns from the trend line, it would make sense to me that we potentially have completed this one wave, and we should be heading up to roundabout this two wave where the 4,000 mark is. It's not particularly associated with many areas of interest, but you can make an argument, you know, candle body closes here, slight deviation over 4,000, you got a rejection over here, you spent a decent amount of time trading over here, decent amount of time trading here, broke down as soon as you did manage to clear this level, huge breakup, this was support, this was support, this was support, you broke down. So breaking back up to this massive magnet level 4,000, flipping it as resistance would be great in my opinion, a final liquidity grab before we are able to fully roll back down. As you do know, if you watch my channel, I do think the S&P 500 is heading down into new lows. I think Bitcoin's heading down into new lows. So all in all, lower time frame wave count, it would make sense to me that we do have a slight push up in the S&P 500 now. Heading over to the VIX as well, once again, this is why I really have to emphasize this has to be in the lower time frames for the rest of my analysis to play out, because the VIX, the volatility index for the S&P 500, is starting to snap back up to the upside after coming into this trend line. And, you know, we've been looking at the 2008 SPX fractal, we've been looking at the 2008 VIX fractal, we'll check out the 2008 SPX fractal in just one second, but for the VIX fractal, this is really at a do or die moment. It perfectly called this downtrend into this trough, and now it's calling for a huge final run up and a peak in volatility round about January, which potentially we could expect to correlate with a Fed pivot. I think a lot of people are hoping the Fed are going to start like brutally pivoting in the next 6 days when the next FOMC meeting's coming. I think that's a little bit of wishful thinking. I don't think that's going to happen. In fact, you can actually see people are predicting a 75% likelihood of a 50 basis point increase rather than a 25. And obviously, if you watch the channel, we've talked many times about what the Fed pivot actually means and how it takes a while for the Fed to pivot and move into actually accommodative financial conditions for the bottom to finally be in play. Now, just because I think the S&P 500 has a slight bounce coming in doesn't mean that Bitcoin has a slight bounce coming in. We've already talked about on this channel how we've basically come up to the 17,600 region, and you know, once again, am I saying that we can't push up to 17,600 before a rejection? Absolutely not. Once again, you know, the videos that we were making, I was saying this is the liquid zone, grabbing a tiny, well, there's not really much liquidity here, but flipping this huge macro level where everyone was thinking we were going to bottom earlier on in June, 17,600, propping up to this level, grabbing liquidity, and then pushing back down is definitely what makes a lot of sense for Bitcoin. But once again, Bitcoin is extremely weak right now, and it's moving a lot weaker than the S&P 500. And a lot of the indicators we've been looking at, you know, like the MFI and such, is telling us that, you know, this volume overextension is already complete. So I wouldn't personally be banking on Bitcoin having a decent bounce from here, but the S&P 500 could definitely get a tiny bit of continuation. Once again, I'm not talking about a huge move. I'm talking about maybe a 1% move, 1.5% move at most, coming up to, you know, the top of these ranges, round about a 2% increase to the upside. So let's also check out our 2008 SPX fractal while I am getting ready to wrap up this video. It's been a little while since we've looked at this. Not too much to say on this, we've talked about this quite a few times, but once again, if you're new, this S&P 500 2008 fractal is beautifully called, you know, troughs and peaks, and, you know, once again, this is very clear to see that the S&P 500, if we follow what happened in 2008, we should be snapping back down to the downside. So that is pretty much all I wanted to talk about for this video. Once again, liquidity conditions in the higher time frame are really topping out. Lower time frames, oscillators, momentum indicators, you know, your wave counts, they are saying, hey, we could push up a tiny bit, potentially before the FOMC meeting, maybe rally for another few days, and then when that FOMC comes out, if we get 75 basis points, that could be the point to finally snap back down to the downside. Now, one chart that I do want to finish off on is something that we haven't talked about before, and this is the TLT. If you do watch the channel, you know that we look at the iShares TIP ETF quite often, and what the TLT is it is simply the long-term treasury bonds for the iShares TIP ETF. So as we know, the iShares TIP ETF holds bonds which are protected against inflation, and what we're looking at here, the TLT, is simply the iShares 20-year plus treasury bonds. So when we do come over to this, once again, you can see this is a market leader, just like the just like the iShares TIP ETF is. As you can see, the TLT broke down into new lows on the 6th of September. The stock market started breaking up to the upside, and once again, this was a huge divergence. The iShares TIP ETF, the TLT, was saying, break back down to the downside, you follow me, I'm your daddy. And what is the TLT doing right now? Well, the TLT is moving up relatively strong, and on the daily time frame, we've had one of the largest increases that we've had in absolutely ages. So looking at the TLT, it really does look like that we are going to be running into resistance and starting to snap back down very, very soon. This is, of course, once again, a leading indicator of what is to happen next in the S&P 500. So if this starts to top out, then once again, we could see liquidity conditions improve for about a couple of days or so, coming up to this 4,000 level, breaking back down to our gamma level, 3,950. And once we do lose the gamma at 3,950, it's going to be curtains, and we're really going to start rolling down pretty heavily to the downside. So that's all I've got for this video, my friends. Like I said, really not too much to update in terms of Bitcoin, unfortunately. It is what it is. I'm not going to make a video on Bitcoin when there's not too much to update. But yeah, macro time frame, liquidity conditions are topping out in the book depth. Lower time frames, we can still get a tiny bit of a bounce. The wave count is definitely saying we've got a tiny bit further to push up. And yeah, that's all I've got for you for this video. Once again, remember, we are now starting a new 5-wave count to the downside, in my opinion. If I get rid of this, this is just a really, I've basically just copy and pasted this, so do bear in mind this is a complete rough draft. But I do see something like this playing out, where, we've got this 1 wave down, we come up to the 2 wave, this would come into our 4,000 level. If we do draw a Fibonacci from our low to our high, you can see this would beautifully put us into the round about the 0.5, just into the golden pocket just before the 618 Fibonacci, and then once again, boom, 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 something like this, breaking us down, and then, dead cat bounce, obviously completing an ABC correction, and then with this final 3 wave, break down to new lows, and then potentially this could be the final macro. Well, it's on the 4-hour time frame, but these do normally take a little bit of time to play out. This could be one of the last final brutal wave counts to the downside that we may see for the S&P 500. I'll keep you up to date, of course. Once again, higher time frames, everything is still absolutely bearish. All of my analysis is intact. In the lower time frames, there's a few signs: momentum indicators, oscillators, volume, liquidity conditions, pushing above the gamma levels of 3,950, saying that there is a possibility of us moving up to 4,000, having a pump before the next brutal dump to the downside. That's all I've got for you for this episode, my friends. As always, if you do enjoy the content, make sure to hit that like button, share the content with your friends, leave a comment down below. That's all I've got for you for this. Cowboy out. Peace.